I'm joined by Rohit Chawdhry, the head of equities at Bahrain Islamic Bank and a regular contributor to international investor publications such as Money Week and The Gulf. Thank you very much for joining us. Let me start with the IEA report, which pointed out or forecasted an increase in oil demand, and as a result there will be pressure on the price of oil as well. Do you think that is a realistic assessment given the current international economic conditions?
Good question. To answer that question, just let's take a step back and look at what IMF is forecasting at this stage. And IMF is forecasting for the next couple of years that the world growth rate will trend back to its trend rate of growth of 4% plus, which we believe that is highly unrealistic, simply because the US is in its own problems, and they have tried quantitative easing, they have tried interest rates, they have tried the fiscal policy, which has been very accommodated, but yet despite mortgage rates being so low, the new home sales haven't risen, they have collapsed. So there is a serious risk that the US might just dip into a double dip recession, and that Europe is only marred in its own problems. And then there is China, who's the savior, or was the savior in 2009 for the global economy.
Right.
And it is quite likely that China may not grow at, let's say, 10% or 11%, which IMF is forecasting for the next couple of years, simply because the credit bubble that they fueled in 2009 is about to pop out.
Right. But how does all that affect the price of oil at the end of the day?
That is correct. And therefore, the probability, the overall outlook for the global economy is uncertain, and there is a serious probability of a double dip recession, which will impact the economic sensitive commodities.
So you're implying here that it's very difficult to forecast the price of oil at this point?
I would say that it's not only it's difficult, but I would say that while you cannot have a price target firmly entrenched, but you can say that there is a fair probability of a downside bias in oil prices rather than an upside bias, unless there is geopolitical uncertainty.
All right, Sri?
Okay, thanks to you, Sev. Rohit, I just wanted to get your sectoral view, especially on the financials, and how would you characterise the strength of the big banks in your particular region? Because one thing is very clear out here, banks are facing higher funding costs. There's also regulatory uncertainty with Basel III.
As far as the financial services sector is concerned, yes, banks in this part of the world, or financial services in this part of the world, have got impacted, and we've seen the provisioning cycle pick up lately. But having said that, the good part about the banking sector in the region is that it's less leveraged compared to its counterparts in the developed markets. To a certain extent, that is a boon in a deleveraging environment. So while there are obstacles going forward for the banking sector in general in the region, but due to lower leverage relative to the developed economies, the outlook is not that much marred.
Rohit, the other big theme I've heard amongst investors is that Ramadan is typically, well, historically, a good time to buy equities. Is that going to remain the same, or is that going to change, especially with all this volatility that we've seen globally?
Well, lately what we've seen is, due to globalization, the correlation between all asset markets have picked up. While your assessment is correct that Ramadan usually is a period of lull activity, but having said that, if the global markets were to take a hammering over the next few months or maybe next few quarters, the Middle Eastern markets will follow suit, because the region is dependent on oil, which is economic sensitive commodity, and if the global growth rate were to tail off compared to what the consensus estimate is, that the growth will stabilize and probably the world will grow at 3 to 4%. If that doesn't happen, then yes, oil prices will come under pressure, and therefore the Middle Eastern markets will also come under pressure.
Now, looking at commodities and perhaps construction materials, what's a good buy at the moment, in your opinion?
I would say that in order to look at the construction sector, one has to be very sector specific and even regional specific. One of the dominant themes which might likely unfold over the next few quarters is the evolution of a mortgage law in Saudi Arabia. Now, that is a big plus, not only for the region but the country as such, because the home ownership in Saudi Arabia is one of the lowest in the world. Mortgage loads as a percent of GDP are simply non-existent. So therefore, if the law does get enacted over the next few quarters, which is a highly likely possibility, cement stocks in Saudi Arabia might look attractive simply because of the theme that is prevalent, but also for the fact that the margin of safety that these stocks have in the form of dividend yields is exceptionally high.
All right, we'll leave it there. Rohit Chawdhry, the head of equities at Bahrain Islamic Bank and a regular contributor to major publications in the region.